What's going on, options traders, or hopefully soon to be option traders? My name is Bo Crable, the founder of Option Scout, and today is a very important video. I'm actually very excited to talk about this. It's going to be a way on how you can avoid losing money in the stock market, and actually this can apply to anything financial and investing related. So that the worst thing that can happen to you if you are new to option trading or stock trading or just investing as a whole is to lose money. And that may be obvious, but first off, losing money financially is not fun. But the most important thing, especially if you're new into the game of investing, is it's going to crush your spirit. Like, it's just going to really demotivate you, and you're probably not going to want to be consistently investing, because the person who is putting time into the market, the person that is consistently investing and doing it over and over and over again, they're taking their earnings, putting a portion of it into their investments. It doesn't matter if it's real estate, stocks, crypto, option trading, whatever it may be. You're going to outperform somebody that just doesn't do it at all, okay? So I don't want that to happen to you. So today's topic, I want to talk about a thing that I call churn. And a really good way to explain this to you is a story I have about when I, for the first time ever, did foreign exchange. And I'm not talking about Forex. I mean, I literally went to a foreign exchange place and said, hey, can I trade these American dollars for Australian dollars? So this is where the story starts. It's kind of funny. I decided to go to Australia because my friend crashed my Tesla, and I was in Utah. I was having a very just annoying, stressful last couple of weeks. I was like, I just want to get out of here, okay? So I took the first flight available straight to Australia. I left from Vancouver, Canada, and I have a couple $1,000s with me. I go up to the foreign exchange place in the airport. Bad mistake on my end, but now I understand why. And I say, I would like to exchange for Australian dollars because I'm going to Australia, and I have American dollars with me. So I'm on Google, and I type in, okay, 1,000 USD to AUD. And it was at the time, I think it was 140. So, me giving them $2,000 should be, about 2,800 Australian dollars. So I give them this. I then count, and then they give me the money back. I count up, and they give me 2,000 Australian. I'm sorry, I think there's something wrong. You said it says there's no fees. What's going on? Oh no, well, we have our rates and stuff like that. And I was like, oh my gosh. And I got a refund essentially, but I was like, if I just kept doing this, I would run out of money. If I give them 2,000 American, get 2,000 Australian back, and then now if I want to exchange back, they're going to give me 70%. So now I'm going to be left with $1,600, and then if I do it again, I get 1,600 Australian, then I go back to get 1,200 American, and before you know it, you do it 15 times, you have no money. So this is churn. Another good example is real estate. If you buy and sell the same house over and over again, you keep paying broker fees to agents, you're going to end up with no money. And with stocks, it's kind of hard to tell this because the churn it seems like it's cheap. It seems like, okay, well, I'm only paying a 30 cents fee here. Oh, well, I'm only paying the bid-ask spread. Oh, I lost a little bit here. I could have held on. It's a bit sneakier in the stock market. Statistically, stocks that are, quality stocks, stuff like that, the average stock in the market is up more than it is down. So a lot of times the stock market is at all-time highs. So if you think about that, if you sell a stock and you try to time it, the odds are you're probably gonna have to buy back at a higher price. And what's the issue with that? Okay, what is the issue with that? If you have $10,000 in Apple stock and then you sell it, and then you wait a week, and if Apple goes up, you now still have $10,000, but now you're buying at a higher price. And that's one bad example. Another example is with bid-ask spreads. So if you are a option seller, and if you sell cash secured puts, as soon as you sell, and if you hit sell to open at the market, you're going to be at most likely a very small loss in the beginning. So if you open up your app, if you're on Robinhood, if you're on TD Ameritrade, if you're on Tradier, whatever platform you're on, you hit sell at the market, you're going to be like, oh my gosh, why am I at a $100 loss? Why am I at a $50 loss? Why already? Well, it's because there's a bid-ask spread. When you sell, and this is more dramatic with options than it is with stocks, but again, depending on what platform you use, you're still going to have this. You're still going to have commissions. Not all platforms have commissions or commission-free. Some are, which is great, but still, even if it's commission-free, you're still paying a price somewhere. It's the bid-ask spread. So, if you just keep doing this over and over again, like if you sell an option, then buy back and sell back, like you're going to end up losing churn. And that can have you to lose a lot. So what I like to do, I sell options. I love trading options, okay? But the issue with options is people have a lot of churn. If you look at the covered call ETF QYLD, practically what it is, it's just an automatic. If you want me to make a video about it, just let me know down below. Actually, I see people talk about QYLD a lot, so if you want my in-depth analysis on it, comment down below. I'll make a video on it. But practically what it's happening, it is buying QQQ, the NASDAQ, and selling covered calls, but at the money. Now, the issue at selling at the money is you are most likely going to get exercised quite a bit. You have roughly a 50% or 49% chance of getting exercised. So the issue with that is, let's say you get exercised, it's a Friday, and then the stock opens back up higher on a Monday. Maybe sometimes you get lucky it opens up lower. Okay, great, you won there. But if it opens up higher, then you have to buy back at a higher price. And if you look at QYLD, it dramatically underperforms QQQ. We're talking about the last 5 years. QQQ has done a 20% average return, and QYLD has done 5.2%. And a lot of that has to do with churn. Now, a lot of it has to do with they're also limiting capital gains, but they're selling, buying back, and that adds into expenses. So another good example is look at ETFs you can invest in. Why is there an expense ratio? Well, that's actually not that good of an example, but still, there may be an expense ratio because now they're having to trade, and that causes expenses and things like that. So, actually don't. I was about to give a very bad example. Don't think of that example. But anyhow, so if you avoid churn, it can help you win. If you're an options trader, then you're going to want to avoid getting exercised. Instead of trying to go for a bunch of premium, selling contracts that have a 60% chance of expiring, go for 80%. Go for 90%. If you're someone who's losing money through day trading, you know what? Start with some stocks that you don't have to sell. And maybe if you're really good at day trading, and also another thing too, an expense that happens with churn is usually taxes. I don't like getting exercised on covered calls because if I get exercised, okay, I have tax I have to pay for the options premium, but it's a way bigger tax if I have capital gains on the stock. So if I have, $100,000 in a stock and I bought it at 80, and then if I get exercised, oh my gosh, that's a huge churn right there. I'm gonna have to pay tax on that. So that's not very fun. That's about it. If you like this video, let me know. I'm gonna be making a lot more content. Make sure to smash the like button. And also, if you want to hear more content and more educational type of stuff, my company, Option Scout, we do free webinars, teaching about the stock market, teaching about option trading and things like that. So if you want to get more info and some secrets about that, definitely click the link down below.